Hi everyone, this is Michael Kramer of Mott Capital. Today is Tuesday, May 13th. It's around 4:30 New York time. So we're going to get into it. There's going to be a lot of data coming between now and Friday. Tomorrow we're going to get producer price index. We're going to get continuing claims, jobless claims, and we're going to get retail sales. These are all going to be important numbers because we're going to get a sense of whether or not these tariffs here in the U.S. are having an impact on manufacturing costs. Also, retail sales, big number. Big estimates are for a flat month, down from 1.4% last month. We're going to find out whether these tariffs or confusion around the tariffs is creating any sort of slowdown in spending. So these are going to be important numbers. Additionally, the job numbers are always important. Market always cares about what's happening there. And then on Friday, we're going to get import-export prices. We're expected to see a decline month over month. And then, of course, we're going to get University of Michigan numbers at 10 a.m. on Friday as well. Consumer sentiment, obviously, an important metric. And so this is going to have a lot of impacts, especially on FX because of what we've been seeing in rates as well. And really what's most notable is that, we did get a little bit of a soft CPI report here today. Even with that, you saw, 30-year rates move up on the day to around 492. And you saw the dollar weaken quite a bit against the euro, and we're going to get into that right now. And so, the euro came right down to the 50-day moving average. It pierced the lower Bollinger Band, and that's where it's found support, at least for right now. And it's looking like, depending on how this data comes in tomorrow, you could be looking at a scenario where the euro actually goes on to strengthen even further versus the dollar and potentially even take out that high. It looks to me like there's a potential, if you can get over the 10-day exponential and the 20-day moving average, that you could easily start moving back up to this upper Bollinger Band, setting up a retest of this high and potential move above it. Obviously, there's still the risk here that if we fall below the 50-day, that we're going to move back down towards 109. But the one thing that's also interesting is that if you take a look at this chart and you measure it from this point here, which was clearly a breakout on April 1st, that was the day before, on April 2nd, the day of Liberation Day, you can see that we hit the 61.8% retracement level as well. So this could be an important spot for the euro to find some meaningful support and for it to continue to strengthen versus the dollar. And really you're seeing similar with the pound, although the pound didn't find support at the 50-day moving average. The pound was able to find support at the lower Bollinger Band. The pound was able to move back above the 20-day moving average and the 10-day exponential moving average. And also, like the euro, looks like it could be set to gain some strength. Here we had what looked like may have been a head and shoulders pattern. It looked like the neckline broke, but all of a sudden when, head and shoulders patterns fail, they obviously lead into continuation patterns, and that could also be suggesting that the pound is due to strengthen more against the dollar. Also, if you kind of measure from this low on April 8th, you're kind of looking at also a 38.2% retracement level. So it also would make sense if the pound started to rally and move higher. Also, when we look at the yen had a pretty big move. It came right up to this resistance level right around the 147.5 to 148 region. Also went above the upper Bollinger Band. And so we're going to see if the yen can handle and stay below this 148 level. If it does, I think it also sets up a potential return to around the 140 level. The big thing in Japan, obviously, is that rates are really rising there, and they're rising here in the U.S. too, but still, because rates are rising in Japan, those interest rate differentials are really closing. And that's really making the yen carry trade not as favorable as it used to be. So you could be seeing that unwind really continue in the yen, with it potentially really strengthening. Gold right now is at a really very, very important spot. You can see we spoke about this the last time, about the potential for a double top pattern. Momentum has clearly been lost, but what's also notable is that we have the 50-day moving average down here at 31.55. You're sitting right above the lower Bollinger Band. Here's your trend line that we broke out above. We now came back down and tested it. So at this point, very similar to that of what we were seeing in the British pound. If gold can make another advance here, it's likely going to take out these highs. However, on the flip side, if gold breaks this support level, you're likely going to see it come all the way back down to around 3,000. Now, if we're going to be in a situation where the euro is going to strengthen, the pound is going to strengthen, and the yen is going to strengthen, then it's very much the case that you could actually see gold begin to rebound here and move distinctly higher. When we look at oil, clearly momentum is starting to turn. We're trying to get above this 63.70 area. This is obviously going to be an important area because I think after that you can probably make a run to right to 66. It's really curious to see what's going to happen there. We know that this has been a very important level over time, and a test of 66 is going to tell us a lot about what's really happening there. If there is a seller in the market, if there was a big buyer at 66, are they now a seller at 66, or does oil just pierce right through it and potentially move all the way back towards 72? It's a little bit too early to tell, but we're obviously coming up to a really big area here, and support still appears to be pretty firm at this 57 to 58 region. I don't really think at this point I don't think a break of that is likely at this point. So I think that right now you're kind of just stuck between these two ranges. DAX is moving into an interesting position here. Just because here's our big uptrend, we've been managing to hold on to that. When you look at the Bollinger Bands, clearly plenty of room to continue to move higher, maybe up to 24,300. The other thing, obviously, is that we've started to, we're getting very close to potentially breaking this trend line. And if this trend line does break, or if it's already broken, you can kind of make a case that maybe it is. What is that really going to mean? So for right now, I think when you look at the DAX and you kind of just put the DAX on an hourly chart, I think right now we're just really waiting for some form of confirmation of what's going to happen here with this trend line. I mean, if we were to break this support level at 23,400, that certainly could, start opening the door potentially even to filling this gap at 22,450. But like I said, as long as that level holds, as long as the trend line holds, the upper Bollinger Bands up here around 24,300, there's room for it to move higher. We're not really terribly overbought, so it's really going to depend upon how this thing opens and trades probably on Thursday and how it kind of goes from there. The FTSE has really stalled out now the last couple of days. Again, when we just take a quick look at copper, because we know that copper has had some really important relationships to it in the past, you can see copper has pretty much also stalled out. So we're in a situation here where it looks like the FTSE is trying to break out. So far, that hasn't been able to happen. I think if you get above 8,600, obviously you have room to run probably to around 8,700 to 8,750. But if you start breaking this blue line, which is the 10-day exponential moving average, that's going to signal your change in trend. That's going to also signal a test of 8,400. A break of 8,400 probably results in a move back towards 8,170. When we turn to the Nasdaq, I had last week we were set up in a pretty good spot for a reversal. That clearly hasn't panned out, and we've seen a pretty sharp move higher. The question really becomes is how much further can this go? We are seeing some signs that we see typically in other indices and markets that suggest that the Nasdaq 100 is now either approaching or is at an overbought level. We've gone basically from being oversold on April 7th to being overbought on May 13th, which is just about a month. And so that's kind of implying to me that we're likely to see the Nasdaq either consolidate sideways and catch its breath, or actually begin to pull back This is also an important area of resistance at 21,150, we'll call it. This was the November 12th high, which was basically the high that we saw following the election. And so it also acted as support for a really long time. And once we broke that support level, the Nasdaq really gave back. So we could be looking at a scenario where the Nasdaq has become overbought on a technical basis, where the Nasdaq has hit basically or retested a very important break of the move lower. And if you're going, again, I hate to repeat myself and say that we're at an important point again, because I said that last week and that didn't pan out. But there's certainly evidence to say that this could be a spot where if the Nasdaq's going to run out of steam, this could certainly be one of those places. Otherwise, at this point, there's really nothing to say that the Nasdaq can't go back to the highs at 22,130, because you can see once you get past this area of support, there's really not much else to stop it. The only issue you run into is how overextended you're going to get in that process, because you're probably talking about an RSI having to go into the mid to upper 70s, and you're talking about a Nasdaq that needs to go significantly above the upper Bollinger Band for that to be completed. Also, last week we were talking about, this being an important area potentially for a reversal. S&P isn't quite as overbought as the Nasdaq. You can see that we're hitting the upper band, but RSI is only still 67. We're at the 78.6% retracement level. So this is also an important spot. Here is basically your, November 6th, and this was your November 11th, November 12th high. You can see that this has been an important region for the S&P in the past. So again, this is another area where if this is going to give back some, it seems like it would be the spot, right? And if it's not, then we're talking about potentially moving back up to around 59.70. Here you can see I have drawn in a rising wedge. I mean, it would be obviously the ultimate bull trap and really kind of mess everybody up if we actually did reverse lower, fill the gap, and then actually continue down, right down and through the rising wedge. There obviously would have to probably be some sort of news event or something to trigger that, but that's one potential scenario that would be the most painful, I think, for everybody. And we know markets love to inflict pain. When we look at the Dow actually had a pretty bad day today, mostly because of UNH. But you can see the Dow is also at an important spot. This obviously was an important level of support. We clearly gapped above it, came back down a little bit today. We're going to want to see if we can hold this support. If we don't hold support, that's obviously going to be problematic for going forward. Here's the 200-day moving average. You can see we closed below that today after getting above it yesterday. So, again, if the Dow can manage to get above 42.650, you're talking about potentially getting up to around 43.9, maybe even filling the gap at 44.16. But, otherwise, this doesn't really look like an ideal setup for the Dow. It doesn't look nearly as bullish as the other indices. Certainly from a Fibonacci type of standpoint, there's really nothing going on here. So that's really all I'm going to have for you this week. Have a great week, and we'll see you next. Bye.